In today's video, I'm going to walk you through one of my favorite price action setups to trade in the market. Hey guys, Akil Stokes here. If you're brand new, I'm a Forex trader. I'm also the co-founder of Tier1Trading.com, which is a trading education platform. And this is the weekend edition of the Trading Edge. Well, it's Friday, so I guess early weekend edition of the Trading Edge. But what I want to show you guys today is one of my favorite price action setups to trade in the market. But before we get into that, I want to say a big thank you to each and every one that is joining me live for the premiere. Do me a favor, if you're here live at the premiere of this YouTube showing, on the count of 3, I want you to type in a yeah on the chat to your right. 1, 2, 3, go! Awesome, I love the energy. I've been doing this premiere feature on YouTube for the past month or so, and the feedback has been incredible. It gives you a chance to join me live as the video's going on. You can ask me questions, we can have discussions, and I think it makes everything that we're doing here much more powerful. Now, if you haven't been able to join me live for the premiere, if you're missing it, you're saying, Akil, I don't know when it starts, do me a favor, hit that subscribe button below. It should be a little red button or whatnot. And on that red button should be a little notification bell type deal. If you have that clicked, you will be notified whenever these new premieres are happening. So without further ado, let's hop into the charts. We're going to take a look at the New Zealand Canada. This is a trade setup that we looked at throughout the week, especially in one of my live trading rooms. And again, what I want to do is I just don't want to show you what the trade setup is. I know a lot of videos out there saying, okay, this is how you trade, just do that, do that. Rather, I want to walk you through the process. So I want to take you through the trade. I want to show you how I do analysis. And I really want to show you a step-by-step story that I create based on what the market is doing. And for you guys that have taken the foundation course, for you guys on the platform, you know that my philosophy has changed over the years to really dissecting the markets at the most minimal element, which is price action, which is a candlestick. And instead of just looking at the what is happening, did we go up, did we go down, it's really kind of shifted to creating a story of why. What is the market thinking? Why is the market doing this? Who is interested here? Who is scared there? And I know that approach may not work for everyone. It may seem a little out there for some of you guys that are new. Don't get scared away. I'm not a nut, or at least a complete nut, maybe partially. But I've just found that by interpreting the market that way, by creating a story in my mind, it helps me really understand what the chart is showing me. And the more I can understand, the easier it is for me to do analysis and really find that edge, which allows me to get in the best trading opportunities. All right, let's go to New Zealand, Canada. This will be fun. This is brand new to me. Brand new to me. Let's see what the Kiwi Loonie is doing. All right. New Zealand Canada on the daily. Okay, let's go through this whole process. Identify what have we done, what are we doing. We are currently trading at previous structure resistance. We are currently trading at previous structure resistance. We are seeing some diversions we have seen some diversions on the RSI. You can see price, if we zoom in a little bit, has tried to probe this level multiple times, and it has failed, even, and this may be a double top on a lower time frame, even going down and then retracing back up. Now, if there's one concern I have with this, there's one concern that's stopping this from being, obviously I'm looking for shorts instead of longs. Let's put it that way, first and foremost. We identified we're trading at resistance. My prediction is that we're more likely to go bearish than bullish unless we violate that level. So as I do that, if I'm looking for any trading opportunity on this chart, it's only going to be bearish. Is that understood? Zero interest in a buying opportunity at this point until the market shows me something else, unless we violate that level. So only looking bearish, right? Here's the one concern I have. And this can still be a decent opportunity. We'll see what it looks like on the lower time frame. The one concern I have for anything longer term would be the fact that we did come down to retest this previous level of structure. That's also a slight sign of trend continuation trade. So you want to keep that in the back of your mind. If you're not a trend continuation trader, you don't care at all. But for me, this is something that stands out for me. The fact that we came down to this level, this previous level of the structure, our previous new structure high here. So keep that in the back of my head. Let's go on to the 4 hour. We may have a kiss of death happening. Mwah, die. Yep, look at that. Kiss of death trade here. And what a kiss of death is essentially, well, not really, close to a kiss of death, is essentially a deep 2618. So, SO, right? If we go down here, we have a move up. We have a double top right here. We have a nice little kind of complex move down, right? Violating the V point of our double top, setting us up for a 2618 trade, right? Ooh, that would have been, look at that, right at previous structure as well. Ooh, sexy. What a kiss of death is, we don't quite see it here, is think about it like this. So, psychology of the market, right? Price action rallies up. It hits our previous level of structure resistance, and it finds what? Buying pressure or selling pressure as it hits previous resistance. And I hope we didn't close above it. That would change things slightly. Okay, we're good. Yep, we find selling pressure. We find selling pressure, right? Bears kind of take control. We push it down. The bulls say, nope, you know what? We're going to fight again. We reload the arsenal. They come back. They fight again. Bulls push it up and up and up and up to that same level. And then what happens again for the second time? The sellers step in. Boom. Not so fast, my friend. Not so fast, my friend. And they push the buyers back. Buyers are defeated. The sellers are able to push them back a little bit further than previous, right? Previously, they pushed them here. Now they can push them a little bit further. They're gaining momentum. They're gaining momentum. They're gaining momentum. But wait, there's more. The buyers make one last ditch effort. They huddle. They say, you know what? This is it. This is the last stand. We must defend this level. And they push the sellers back up and up and up and up. They push it further than they have before. And ideally, you would see something like this. Ideally, you would see a candlestick with a wick like that, where in real time, obviously, it looks like the buyers are in control. And it's like, they did it. They rallied the troops. They're going to create new structure highs. The bulls are going to win. The bulls are going to win. Right? And then what happens here? Sneak attack by the sellers one more time. And boom, rejected. This is your ideal kiss of death, where the market kisses that level, they get a little bit of confidence, and then boom, slapped in the face. And then after that, usually, after that last ditch effort has failed, what do you think the buyers do? They give up. Yeah, they're like, you know what? Not today. Not today. Come on, we're going home. We're going home. Yep. And then you see a rally down. That's the kiss of death. So close. We didn't technically test the highs here. You can see our VS1 highs right here. We don't technically test those highs. So it's not a kiss of death, but same type of deal. We've come up for a third test of those highs, and now you've got a bearish engulfing candle there. This will be a sell at market, man. I don't see anything wrong. I mean, obviously, wait for this. What are we on, 240? Wait for this candle to close, this red candle. This can be a sell at market, you know, assuming it doesn't kind of, and this is the hard part, right? You're looking at it and you're like, I should sell. And then you're looking at this candle and it keeps going like this. And you're like, crap, right? It's just giving you more risk and eating into your reward. And you're like, man, F that. I'm just going to sell it right now. Stop eating my profit, market. And then you do this and what happens? Before the close, the market rallies up and you're like, goes back up, you took a loss, and then you look at it in hindsight, right? Akil said, review your trades. And you're like, man, I never should have been here in the first place. Why did I enter? This is just a big green candle. Why did I enter? Well, because in real time, you got emotional, you got scared, which is not a problem, by the way. Let's be honest. I've had this happen many a times. I've had many a times where, and this is going to follow up on our conversation earlier about, are we wrong, or did the market just not care what we wanted to do and did what it wanted to do, right? The market does what it wants when it wants. The market doesn't care about, hey, Keel, I know you want to get involved in this lower low, lower close, so I'm just going to chill out until 9 o'clock and let you get involved, and then I'll start moving again, right? Market doesn't care, right? I can't call the market up and be like, hey, do you mind not pushing down any further? I got a nice risk reward right here. I don't want to ruin that. Just saying. Market's not like the market's not calling me back. Yeah, okay, I got you, man. I got you. market don't care. Rain says the market is a willful teenager. Oh yes. Yeah. Or the market's like my son. My son's 4 years old. We're calling him a three-nager. We'd be like, hey, Jaden, hey, don't touch that. He looks me dead in the eye and then touches it. I'm like, blatant disrespect. Looks me dead in the eye, too. Yeah. Yeah, my wife started calling him a three-nager. Started getting all emotional and stuff. I'm like, what the heck? Gosh, it was the worst. But anyway, yeah. Nick said that would have gotten me beat down as a kid, yeah. I was thinking about it, Nick. But I might have been live on Instagram, and these days everyone's snitching. Anyway, so lost a train of thought. Good trading opportunity here. And the next thing you want to do here, right? There's three things we want to know before we ever take a trade. What are those three things? Let's get back on the education train. Choo choo. What are the three things? Entry, stops, and targets. So if Taylor says, by the way, is this what you're looking at, Taylor? I heard you say boom. I'm guessing that was boom. This is what you had on. Or the opposite. Same analysis, perfect. Yes, that's good. It's always good when you see the markets the same way as me because, so awesome and whatnot. But no, it's just seriously, just technically reading the markets, right? Going through the process. I.P.D.E. We all have different ways of evaluating the markets, or we all have different ways of trading. The analysis shouldn't be obviously going to be different whether you have a kind of a more of a counter trend versus a trend continuation approach. But the analysis should kind of be the same, right? The analysis that you have of the market, whether you're a trend trader or a counter trend trader, should kind of be the same. I mean, the market is doing what it's doing. Now, how you interpret that as far as a reason for you to get involved, that could be different. Taylor can be saying, hey, looking to get short. Manish could be saying, hey, looking to get long. That could be different. That's understandable. But the analysis should be the same because the market price action is showing us the same thing, is it not? I mean, we're all looking at the same chart. Now, we may have different actions, but we're all looking at the same chart. So anyway, entry, stops, and targets, that's the next things you want to do, right? So you measure them out. You have plenty of time. You have half an hour. You want to figure out, okay, my analysis said look for potential shorts. I found a reason for entry, right? I decided how I would enter the trade, which I would get short. Now I want to make sure the trade meets my plan, right? Make sure it meets my risk reward profile. So let's say our entry is a lower low, lower close, L3C right here at market. And again, this is loosely because we don't know where at market will be. Where do we want to put stops at? And I know everyone's rules are different, but in general, I think we would all say above structure, right? Above this beautiful red VS1 level, right? That level shows us it's a visual, right? A visual look at where our structure zone is. We want to get above there. So let's say, okay, well, stop's going to be an ATR above there. ATR is what, 26 right now? So boom, 92.56. Let's just say 75s, right? So let's put stops up here. The next question is, where do I want to put targets at? Where am I shooting for? Where do I predict price to go next? recent structure lows. So that lower VS1 level down there. And again, we had a conversation on Monday about identifying structure, identifying zones of structure. We talked about 3 ways to do it. Right? For you guys that remember Monday's Q&A, we talked about the easiest way. If you want to just a set black and white thing, use the VS1 levels. These VS1 levels give you an excellent idea at what levels of structure you should be paying attention to. However, we also talked about what? What did we talk about on Monday? Who remembers? How many of you guys were paying attention since you didn't watch yesterday's Trading Edge video? Yeah, Monday's Q&A, our Monday masterclass. Shame on you. The most powerful session we have during the week. Bump. A bump. A bump. A No? We talked about drawing out zones of structure, right? So if we use our VS1 to say, this is the level down here I want to pay attention to. Remember we talked about 2 ways that price action reverses, right? We have V bottoms, V tops, and then we have kind of these accumulation distribution type deals, right? We look at this down here and we see that the market kind of consolidates down here, right? We take this zone, we can take this bigger zone. If we're conservative, we say maybe, hey, I want to be involved at the top of this zone versus the bottom of this zone. Doesn't matter which you choose, it's all personal preference, but at least you kind of know where you're looking for. Now, what also exists here that may sway your opinion? I did explain the Wyckoff cycle, yeah. Not to brag, but I did an excellent job on Monday. I did pretty darn good. Not to brag. I mean, I never brag. I am the humblest person there. If there was an award for being humble, I would get it every time because I am so humble. Yeah. What else is lying in there? Some other minor structural way down. Yep, there is. And you can certainly take that into account. What else? What else? If we're trying to kind of decide what part of this bigger structure zone at the bottom do I want to take targets at? Top, bottom, middle? Come on, think about the small clues, right? Trading is, we're detectives, right? We are detectives in the market, right? Our job as detectives is what? We are trying to find very, very, very small clues and put the pieces together. There's something big you guys are missing. It ends with a 0. Nope. Not fibs and ABCDs. Nope. There we go. Psychological number. So if you're in between these levels, right? I had a good conversation with Naomi the other day about where to take targets at within structure. Let's say you're sitting in between these levels where you're like, man, Akil, I got the VS1 lower. I got this little structure box you talked about higher. I don't really know where I want to get involved at this level. Is there anything else? What is a psychological number right here, right? 91 cents. If I gave you the choice, right, to be either right above or right below that psychological number, what would you choose? Probably right above, right? So we have the high of our structure zone right above. You guys can also look at this. You probably won't notice it, but this level right here, right? A little accumulation right before the big breakout. We call these the elephant candles, just because they stand out like an elephant in the room. And then I think Nick mentioned it. You got a little inside structure right here as well. I don't think this is a bad level. I think this is the safest level you can be at. Well, not the safest level, but this is being here at about 91.11 is a much safer level than being at the very lows about 90.77. Now, many traders will look at this and say, well, you know what, Akil? I'm leaving meat on the bone. I'm leaving meat on the bone, right? 91.11s, our lows are at 90.77s. I'm leaving 40 pips on the bone. And this is going to be based off of your trading philosophy, right? Is your trading philosophy, I need to get every single pip from the market? Or is it, I'm just trying to get mine and get out before danger comes? And I can't tell you that. That's going to be up to you. I can tell you my personal philosophy. I don't care about every single pip. I'd rather be safe and leave 40 pips on the bone than shoot for an extra 40 pips, have the market reverse at a level that I thought about taking targets at, and get nothing. Matter of fact, worst scenario would get a loss. A little better scenario is break even, but get nothing. I'd rather always get, I shouldn't say like that. Within my rules, I'd rather always get something versus nothing. You don't want to always say that, because then you get into the thing where people start taking targets early and they're like, well, Keel said something's better than nothing, so I went up 5 pips and I took it. I got something. And I'm like, okay. I guess I did kind of say that. I didn't mean it that way, but yeah. So I'd rather be, I always aim for the more cautious level with my targets than the aggressive level. That's just me. Again, I am a counter trend trader at heart. I'm a conservative trader at heart. Every once in a while, I'll shoot for my big home run trades. If I'm going to shoot for a home run trade, do it on target twos, right? We looked at this level right here. Again, I did have some concerns about this from the daily chart, if you guys remember, because this was our previous structure high. But if you want to shoot for a further level, right, do it with your target twos, right? Take yours, get yourself to break even, right, where you have no chance of losing any money aside from a spread or some type of freak event where the market goes bonkers and you get slipped. And then if you want to shoot for a bigger move, right, do it with your secondary targets. Shoot for that bigger move with target twos and shoot down for 89.50, something like that. But do it after you've already put some money in your pocket, after you reduced all your risk. Do it with house money, essentially. You feel me? Is that a cipher that's already completed? You know what? I think it is, actually. I didn't even look at that. That could have been a reason for entry as well, or it could be a reason for entry. I think that is a cipher. Let's see. Dun, da, da, da. Enigma says yes. Cipher completion right at 92.13. So technically, right, we haven't violated our highs. Technically, if you're a cipher pattern trader, you can enter right now at market instead of waiting for the close, because technically this is an advanced pattern formation. If you are an advanced pattern trader, the pattern has not been invalidated. You can enter at market. It's just a pattern that you didn't see. You're entering late. And you can use that entry as a reason to get involved in this trade. Boom. But Akil, 5 hours from now is FOMC. Will you still engage? I'm done trading for the year. So I'm not engaging in anything. If I were trading, would I? I would, yes. I would this one. Yeah. This is not a pair. Again, there is going to be a ripple effect across the markets. The FOMC shouldn't affect this one too much. These are two kind of, I don't want to say minor pairs, but these are two pairs that I don't think will be affected as much by the ripple effect. I think the ripple effect will affect the euro. It's going to affect the yen, and it'll probably affect the Swiss franc. So if we pop back to the charts real time, you can see that New Zealand Canada gave us a very nice follow through on that move. We actually rallied all the way down to retest previous structural lows before we started bouncing back up and doing this and that. It actually looks like we could be putting in a potential bat pattern as well. But again, no need to really worry about that. My trading's done for the year. But I want to take you back to the trade we talked about last week as well. And not the trade, but I guess I should say the trading opportunity. It's funny, I mentioned I shared a post on social media, a couple days ago about people that blindly follow trading ideas, where you'll hear me analyze a chart and be like, hey, we have this potential trade on the euro dollar short. And before you know it, people are just like short euro dollar, short euro dollar, short euro dollar. And you didn't even really mean to trade. I just found it funny how people always try to take the shortcut and follow others, and it typically ends them up in a worse position than when they started. But You can see we had a very similar situation here on the euro dollar the week before, where we were looking for a retest of this zone. Remember, we had a higher level up here. And we kind of got that same type of 3-bar reversal setup where we spiked and we probed above, right? You can see previous structure right here. We spiked, we probed, we tested that level, putting in a reversal candle right here. Again, even though this candle is green, this is technically, I look at this as being a bearish candle. And then we followed it up with a lower low, lower close candle. And I thought this would be a very good entry technique. Again, in real time, we were dealing with the interest hike decision. So I told all of our traders to go away, stay far away from the euro. But putting that aside, just from a technical perspective, this would have been an awesome entry. And guess what? Price action didn't follow it. And that happens. But if we take a look and revisit just the risk reward, again, look how much risk, or look how little risk we had compared to our potential reward here on the euro dollar. And even going back to the New Zealand Canada, if I can find that strange pair, we were in a very similar situation where we were looking for a risk that was very small, right above these previous structure highs somewhere, and a potential reward that was a lot greater than that. I think going down, what did we talk about 91 cent even. And this is what you want to do as trader. You want to consistently put yourself in a position where you have the risk reward in your favor. So if you take a look at the past few weeks and the two trade setups that we looked at, again, this week, the New Zealand Canada, last week, the euro dollar, two very similar type of trades. And you can see one winner, one loser. Now, again, I think it was foolish to try and trade the euro dollar during the FOMC statement and the interest rate hike and whatever, but let's just pretend that didn't happen. Let's just take it as, face value as a normal trade. One win, one loss. Many traders out there think that you have to have a certain win percentage to be successful. Do me a favor, if you're watching live right now, let me ask you this. What would you say is the minimal win percentage to be a consistently profitable trader? Go ahead and type it into the chat to your right. What is the minimal win percentage that you need? So a trader must be 70%, must be 50%, 40%. What must it be? And I ask you guys this because I think overall, and I'm guessing I have a very knowledgeable group joining me right now, so the answers are pretty legit. But overall, I think the industry presents this idea that we need to win more than we do. Historically, if you look at some of the best traders of all time, they're typically winning between 20 and 40% of the time. So if you're under this impression that you need to win 80% of the time, 90% of the time in order to be a consistently profitable trader, you've got the wrong impression and you're actually putting a lot of pressure on yourself. Think about it this way, right? If you need to win 70% of the time, you need to win 7 out of 10 trades, that's a lot of pressure per trade, right? If all of a sudden you get 2 losers, right, you're kind of out of your win ratio, and that, that kind of stems up those emotions to do something different, to do more, to try and get revenge, and that's just a negative in all aspects. In reality, your win percentage doesn't really mean crap. What would you say is more important? What's the most important thing, aside from the idea that it's win percentage? Type it into the right. The most important thing is your expectancy. The most important thing is your profit factor. At the end of the day, are you profitable? And yes, you can be profitable with a 70% winning strategy. You can also be profitable with a 20% winning strategy. For me, what I'm looking to do in the market is not really win at a very high rate. I would like to win and continue to win more than I lose. Historically, I'm about 50%. But the main focus for me is risk reward, right? How much am I risking versus how much am I willing to get as reward if the trade goes in my favor? And my goal is to always have my reward outweigh my risk. And if we do that on a consistent basis, we can easily put ourselves in an opportunity where we have a nice win like the New Zealand Canada and an unfortunate loss like the euro dollar and still be in profit. Because guess what? The euro dollar was a loss, but it was a very small loss, right? The New Zealand Canada was a win, but the win outweighed the risk that we had on the trade. And if you do that consistently, right, you're going to put yourself in a position where you no longer have to win at this high win percentage. It's going to take the pressure off of you. And when the pressure's off of you, you're more likely to take the right actions. And we all know the cycle, right? You take the right actions, you get the right results. You get the right results, it stems your belief, right? The more you believe in yourself, the more you take right actions again, and the cycle just continues and continues and continues. So I want you guys to think about that going into the new year. Speaking of the new year, probably my last YouTube video of the year. I know we're taking a few weeks off here at Tier 1 Trading, so we're not going to be doing the day-to-day stuff. If you're a member on the platform, I did mention that if I have time, right, knock on wood, I'm going to try and get back into backtesting that strategy that I started earlier in the year. And if I get time, I may give you guys a video update, but my to-do list is bigger than Santa's Christmas list, so we'll see if that happens. But here's what I want you to do if you guys are new, right? I want you to click the link below this video. It's going to take you to a free series of trading videos by my buddy Jason Greystone, right? It's called The Truth About Forex Trading. This is going to set you up with what you need to do, especially the mindset of what you need to do in order to get your trading started on the right track for next year. It's a free series. Invest some time in it right now. Watch it, practice it, watch it, practice it, and prepare yourself for the new year. That way you can get started on the right foot, and that way you can go on to see the success that you want to see instead of kind of waiting it out in the water and kind of hoping life takes you in the right place, right? For you guys that are frequent listeners to the Trading Coach podcast, remember I did a podcast episode on that last week about if life is this body of water, right? You have three choices. One, you let the tide just kind of take you where it takes you, like life just takes you somewhere. Typically you end up right where you started in the middle, just treading water until you die. Two, you can grab a paddle and start paddling in one direction, right? That way you're going on the right path. It's just going to take you a lot of time to get there. Three, you can invest some time, right? Not start paddling right away, but invest some time, build an engine, and then go full bore at approaching your goals. And that's how I've always approached life. So I think this is the perfect time to do it. There's nothing going on in the markets. You don't need to worry about trading. Just worry about setting yourself up for success in 2019. Now, before I let you go, I'm going to share with you a little Christmas video at the end, but do me a big favor, guys. If you like this video, show your support. You can do it in 3 ways. You can subscribe if you're new, first and foremost. Remember to hit that notification tab. That way you can join me live for these premiere sessions. But also share this on social media. You know, whether it's just a share of the link, whether it's a tweet telling me what you like about this video. That's the biggest way that we continue to spread our word here. We're preaching something different here at Tier 1 Trading than the majority of the people out there on YouTube world are doing, right? Everyone else is get rich quick, right? Big gold rope chains, Lamborghinis. We're preaching kind of hard work, good old fashioned, be realistic about your expectations, use trading as a tool to pursue your passion, use it as a tool to gain that financial independence later in life. But it certainly takes time and a lot of hard work. And I think we're doing a good job at spreading that message, but you guys are the biggest help in doing so. So continue to share it on social media, continue to hit that like button, and continue to leave comments underneath. Believe it or not, I do read all your comments. Lots of traders are reading your comments as well. When you have positive and inspirational things to say, especially to the newer traders, it helps them massively. So keep it up. So until next time, plan your trade, trade your plan. You guys have a very happy holidays. If I don't see you, have a happy new year as well. And just wishing the best for you and your family.
Well, I can't believe it, but it's already December, guys, and we just wanted to take a minute and wish you guys a happy holiday. You know, as we come into the Christmas season, we get a lot of questions from traders about, what should I be doing, you know, as we go into this time of year? Should I be in the markets? Should I take a step back? And so we just wanted to kind of take a minute to talk to you about what you should be doing right now.
Well, typically at this time of the year, the markets aren't going to do much. The markets are taking a holiday break as well. So if you've had a great year up to this point, congratulations, hats off to you. All of your hard work has paid off. If you've struggled, well, the one thing you don't want to do is try to make it back, because you're probably just going to dig yourself into a deeper hole. What you need to be doing during this time is to start prepping for next year, start reviewing your trades, start going through continued education, and make sure you're getting yourself set to achieve your goals in 2019.
Yeah, it's absolutely all about the planning. When we launched the company on the 25th of January, I showed everyone this calendar, and I said, this calendar is going to fill up really, really quick, so it's important that you use your time wisely and you plan. So now's a really great time to plan for next year, and I'm going to give you the calendar, which you can download in the link below.
So yeah, guys, go ahead and download that and kind of start planning for what's to come over the next couple of weeks. But in that time, again, we wish you guys a happy holiday, Merry Christmas. We look forward to seeing you guys in 2019.
Happy Christmas.